Hi there, friends. Thank you for joining us today. This is Brock Falconer, Western Region DI Manager at Illinois Mutual, obviously in partnership with OCI. Wanted to thank you for your time today, and we'll go ahead and get started in talking about disability insurance specific to certain occupations. I think if nothing else, you'll leave knowing that there are some opportunities outside of the normal realm that everyone kind of chases down in the disability avenue, as well as how DI can be a great referral tool for you and your book and be something that can coincide and be parallel to your proprietary markets versus reinvention of the wheel. So outside of, again, what everyone is typically chasing after for disability insurance sales, which is definitely more your white collar professional market, doctors, attorney, dentists, so on and so forth, keep in mind that we at Illinois Mutual are actually very aggressive in occupations that are more of a shower after work versus before work. For instance, we do great with farmers. We'll talk about that here again in a sec. Barbershops, real estate agencies, definitely solid in more of your brick and mortar kind of occupations. And just note that, again, there are opportunities for what we know is a larger part of society. We'd love to write insurance and do our proprietary stuff with those top 10 percenters, but we actually have some awesome opportunities to work with the other 90 percenters as well. Keep in mind that there's a lot of referral abilities, obviously, within these markets, and maybe your proprietary clientele is the executive or the attorney or the dentist. But again, dentist office specifically, think about the ratio of hygienist to dentist, 6, maybe 8 to 1. Again, a lot of opportunity to build a more robust book, a more dynamic book, a more holistic book, and ultimately help out your proprietary client as well. As we know that the best thing that employers can have is employee retention, and I'm sure disability insurance or income protection is probably one of the key components to that. Again, people turning wrenches in mechanic shops, people plowing fields on farms. There are DI opportunities and very aggressive disability insurance opportunities with Illinois Mutual. And again, could not be any better daytime traction than some of these markets versus waiting for folks to get off work and go the normal route. We at Illinois Mutual like to function off of a foundational approach. This is probably not a new concept, but definitely like the idea of talking about a mug plan. What is your mug plan? Well, that's a lot different question than do you have disability insurance, isn't it? Ultimately, it's the same question, just packaged a little more cognitively, and I think does a much better job at talking about, hey, we're trying to take a foundational approach to your ability to pay for your mortgage, utilities, and groceries. If not for a disability insurance plan, what is your fallback? We know the reality is it's savings, it's retirement, and then we dip into assets, and lastly, you borrow money from rich Uncle George. But maybe in lieu of all that, we could set up an insurance plan to make sure that our greatest asset is protected, which is our ability to earn an income. Again, we like to start foundationally with the idea of covering someone's mug. We definitely can offer full maximum coverage to folks, but we at least want to make sure that the foundation of what their lives is built upon is covered bare minimum. One nice opportunity in the disability insurance realm in trying to not necessarily avoid underwriting, but try to make it less of an arduous situation is to sell what we call non-med underwriting, or the industry typically calls it simplified. We're pretty unique in the fact that we actually will, all the way up to our max issue age of 60, offer a non-med policy for $3,000 a month in benefit or less. Now, keep in mind, non-med does not mean guarantee issue. We're not saying sign up and you have it coverage. What we're saying is you're not going to have any lab requirements and you're not going to have to submit financials. There's still going to be a slew of medical questions on the application you have to answer. There's still going to be a section to fill out what your financials have been, and you're obviously signing that all the information is accurate. But again, you're not having to dig up the tax returns and go in for the needle poke. Going to have a quicker turnaround time on non-med as well. We are still going to do our behind-the-scenes underwriting with Medical Insurance Bureau, MIB, a motor vehicle report, as well as a script check, as well as, again, review those medical question answers on the application. But again, it's going to be more turnkey in the fact that you're not having to schedule that exam. You're not having to talk to your CPA to get a tax return printed out. And ultimately, you're looking at a turnaround of probably 1, maximum 2 weeks on these cases versus your 4 to 6 week fully underwritten. Don't confuse this with life insurance either. We're not talking about a higher priced face value on this type of contract. Literally everyone that applies for a policy at Illinois Mutual and the amount is $3,000 or less, it's automatically going to be processed non-med. Saves us time and money, saves you time and money, saves the client time and money, and ultimately makes for a smoother process. We don't want to limit what a client specifically needs in the disability insurance realm, but again, if they qualify for $3,150 a month, maybe it makes a little bit more sense to go down to $3,000 again, just to make it a little bit easier to get done. You can think about these kind of occupations as well. We're not necessarily dealing with people when we're looking at dental hygienists or mechanics or farmers that are making, $200,000, $300,000, $400,000, a little bit more conservative incomes. Again, we'll get into farming a little more specifically here in a moment, but even though they're grossing and very successful and grossing a lot of money, what do they actually show? Real estate agents are a great example as well. They'll have one good year, one bad year. Always good to ride them when they're doing well, which is really nowadays. We'll wait for the next recession to kind of change that. But even these folks are really taking more of a mortgage, utility, groceries approach to protecting their income. And again, that 3,000 or less threshold seems to be where a lot of the business comes in our space. We do have marketing specific to not only the occupations previously listed, but again, a lot of the occupations that we function very aggressively in. I wanted to point out that on our marketing pieces, we actually have this pie chart that shows 100 plus years of claims history. I think this is important, claims history from Illinois Mutual, by the way, specifically. I think this is important as the idea of disability insurance typically connotates in kind of an off-kilter direction in clients' heads. Disability insurance as a whole is probably the worst named insurance because it really should be called ability insurance, since you're insuring your ability to work. Talked about maybe packaging it with the idea of, hey, do you have a mug plan in lieu of saying disability insurance? But I would use a lot of other examples as well. Income protection, paycheck insurance, lifestyle protection, retirement protection. There's a lot of different ways to box it and package it that I think speaks a little bit more altruistically to clients. But I do like to point out this pie chart that's in all of our specific marketing pieces for occupations because it shows all the different ways that people become disabled. One of the bigger surprises is the mental, nervous, and substance abuse, and that 5% is actually pretty low in comparison to the industry. Obviously, cancer, nervous system injuries are a very big percentage of our claims in comparison, again, to the industry because, again, think of who we're covering. We're covering the people plowing fields and turning wrenches versus only having a book built off of pencil-pushing individuals. Musculoskeletal is always going to be the leading cause of claim. That's back, neck, and spine, as we see a lot of issues with that as we age as well as we make bad decisions on our physical activities. Again, back to the idea of a foundational approach. Let's think about a Jenga tower. We do fantastic ways of making sure that tower doesn't fall by pulling out blocks towards the top and in the middle, and being very careful and meticulous and really doing fantastic things for our clients. But I wonder how many times out of 10 that tower is going to fall if the bottom row of blocks is taken out. I'm no statistician, scientist, or mathematician, but I'm going to say it's going to be 10 out of 10 times. And that's really what we're talking about, protecting the foundation of someone's tower, their tower being their life and everything that their income pays for. We insure everything in our lives to the hilt, right? And we have fantastic insurance companies that do it. We're not buying bargain basement coverage in any parts of our lives. And yet we haven't insured our ability to not only have an income, but to pay for those insurances as well as what those insurances cover. It's a little bit daunting a task to try to get someone to think about the need for income protection. But I think if you start with the idea of all that your income does for you and the fact that there's no guarantee you're going to be able to do your job tomorrow, 1 out of 4 people suffer a disabling event during their working career. I think that can be, again, a way to turn someone's mind around. And again, we can chase those white-collar professional market folks as much as we want to and be in a large competitive situation because everyone's doing that. Or we can take more of an approach and working with more of your middle America, blue, gray collar folks and making sure that they're covered in lieu of having to self-insure, as that's always the worst disability plan you could ever have. Talked about this on the previous call, but definitely wanted to refocus on it. I mean, what are we competing with? I mean, it's kind of silly when we think about, well, I can't afford that policy. Well, Probably the fact is you can't afford not to have it, but let's look at where your inability to afford money goes to. Unlimited data on our cell. What if we just went down to 10 gigs? I think we might survive. Save that $15 a month. And by the way, that's a third of the price of what you could do for income protection. How about instead of a triple shot grande latte every day at the corner, maybe you brew your own coffee every other day, and then when you do stop, maybe you do a double shot tall. That's what we're talking about. Cents on the dollar to make sure that the entire dollar's covered. I mean, does that make sense conceptually? Would 1 or 2 pennies out of every dollar to make sure that that dollar stays in your pocket? Does that seem like a good deal? Could we maybe cut back on some of the cable TV bills? Maybe we drop Showtime and HBO for the summer because we're going to be more out and about and not really be sitting in front of the TV now that the weather's nice. That's really the small adjustments we're talking about in lieu of, oh, I can't afford it. That costs too much. I would hope that no client says that it's not important. So really, you're going to be dealing with these kind of bills and these kind of expenses in someone's life versus someone saying, oh, well, income protection and disability insurance and whatever you want to call it isn't important to me because, my income's guaranteed. Well, no, it's not. Again, back to farmers and ranchers. We love our friends out in the field. Keep in mind, these folks amazingly never show an income. However, they have a beautiful home that had the kitchen redone 5 times in the past 20 years, brand new trucks, brand new farming equipment, yet again do not show an income. Well, we as a carrier that again really focus strongly on that middle America market, we say, well, you know what? We need to offer a benefit to these folks, even if their returns tell a different story than what we really know is going on. So based off of farm size or acres or herd size, head of cattle, we can give someone up to $2,500 a month in income protection, paycheck insurance, and up to $2,500 a month for business expense. Keep in mind that business owners, again, need to really cover both aspects. Income protection for the money that they claim, overhead expense for the money they don't claim, which is their overhead expenses, the fixed ones that come out pre-tax. Really, it's the 1-2 punch of those kind of policies that a farmer, rancher, and any business owner needs. And again, we can build potentially based on either acre or herd size up to a $5,000 total package for these folks, where most carriers won't want to cover farmers because of the actual physical labor that they do on a daily basis. But on top of that, they want to see some kind of verifiable finances. Again, we're not going to throw a maximum policy at these folks, but a total $5,000 a month package is a lot more than zero. We do very well in this market, and we find that this kind of herd size and acreage situation is probably used about 75% of the time that we work with farmers, again, just because of the fact that they're using a lot of that tax shelter, as would any of us if we were in that space as well. Lastly, wanted to finish up with kind of a unique idea for a referral, believe it or not. We can cover up to $1,000 a month for a stay-at-home spouse. The trigger being the wage-earning spouse has to either have an Illinois Mutual Disability Insurance policy in force or be applying for one currently. Again, $1,000 is not going to, maybe be the full reimbursement for that individual that is a stay-at-home spouse and all of the requirements, whether it's child rearing or whatever it might be. But again, it's a lot more than zero. We can put a return of premium rider on there as well, which gives them 100% of their premium back at retirement age. And here's kind of the unique way that, again, this can be kind of a back channel referral. I have a producer that within the next month will have sold a total of 10 policies using this kind of idea. And what it is, essentially, he knows that, especially at any stay-at-home spouse that's taking care of kids, he knows that every day from like 11 to 2 p.m., they're at the park or they're doing play dates or they're doing, mom and kid classes. And essentially they're talking to other stay-at-home spouses. They find out that they actually have an insurance policy on themselves, even though, quote unquote, they don't have a wage-earning job. I would recommend never telling a stay-at-home spouse that they don't work. That's going to be a tough room to get out of, keeping, all of your limbs intact. But ultimately, this producer is using this ability to really connect with the wage-earning spouses by getting the interest drawn up from the stay-at-home spouse. We know that there's one specific reason why a stay-at-home spouse is actually able to be a stay-at-home spouse. That means the wage-earning spouse must be doing pretty good. So again, believe it or not, based off of kind of this idea and really spreading the word through a stay-at-home spouse and multiple ones at this point, he's actually connecting with the wage-earning spouse as well. So unique ability to utilize a really unique program that we have at Illinois Mutual to, again, kind of get into a market and get some introductions and referrals that might not have been available to you otherwise. Again, the entire industry is going to be chasing the top of this iceberg. Your doctors, your attorneys, executives, 3, 4, 500,000 income. You know, we can help out with those folks. That's not an issue, but we're really built for the percentage of that iceberg that's underwater, which is, 80 to 90% of it. We have over 107 years of experience in this space. We know how to underwrite it. We know how to structure it. We know how it's purchased. And I think there's a lot of opportunity for you to be successful. Again, not necessarily changing what you're doing successfully now, but just, again, having another tool to be able to work with and an ability to insulate what you're doing on the proprietary side of things because of the fact that we know an income is going to be important for retirement, investments, life insurance. I mean, you name it. Regardless of what you're doing, again, on the proprietary side, I'm sure that protecting that client's income is going to help you in the long run. We have, again, very specific to a lot of these occupations that we've spoken about today, we do have association opportunities, and essentially what this is a marketing agreement that you would get signed by any officer of a localized association, as we're not chasing a lot of the national ones. We like B&I groups. We like chambers of commerce. We like, again, very localized associations. A marketing agreement signed, you as the producer of your office is the preferred individual chosen to market to their members. They receive a 5% discount. That discount is available for you in working with these association members. Therefore, if any association member was working with another agent, they would have to go through you to get that 5% discounted policy that, again, is endorsed but not paid for by the association. Again, great opportunity to gain, again, a nice referral pool using DI, again, as the door opener, but by no means, obviously, being the only thing you're going to focus on once you get in front of these clients. I definitely recommend just looking at, what kind of B&I groups are in your area, what kind of small localized associations are meeting. I know in Seattle, where I am, there's a great dental hygienist association that we've done some work with, and I know those kind of things kind of function in a lot of the cities, and they might have some attachment nationally, but they all kind of function autonomously in their area. And again, great ability to meet folks in kind of a grander scale, ton of marketing opportunities and ideas that you can send out their way. And, this being May, being Disability Insurance Awareness Month, what a better time to pop the top on some of these opportunities. I wanted to thank you for your time today. I hope this was informative and helpful in what you're doing. I hope you're having success this week and moving forward. And I really hope that DI can be a congruent part of what you do in your sales portfolio. Thanks a lot, guys, and you have a great day.